work, Jim. Thank you. Generation mining. It's a long day. Where we are, kind of, I think Jim just gave a shout on his map there as well. But we're on the North Shore of Lake Superior, 10 kilometers from the town of Marathon, 30 kilometers from the Hemlo Gold Camp. As you can see here, it's a very mining-friendly area. Equinox Gold, which is, I believe, almost in the commissioning mode, and Alamos's Eagle's getting built, and as we all know, Magino and Côté to the southeast of us are almost finished construction, but very mining-friendly area. Just a zoom in of our infrastructure here, being in Northern Ontario. For those of you that don't know, this area is very well developed. We have 2 power lines intersecting our project. We're going to be tying in on the Manitouwadge line, about a 3-kilometer cutoff. It is all green power from Southern Ontario, nuclear power. We have the Trans-Canada Highway running basically right through our project. We have the town of Marathon just south of us. We got 2 rail lines, a CP line just north of us and the CN line just there as well. And it's really nice to have a road right to the project. It's about a 10-kilometer drive from the town of Marathon. Fairly big exploration package, it's about 220 square kilometers. The quick history of this project is Stillwater purchased it from Marathon PGM in 2010. They tried to put it into production in 2014. Some issues with the board and the management. Management got thrown out. Sibanye, they put the company up for sale. Sibanye purchased it in 2017. So very little exploration has occurred on this project since we've acquired it. We've done about 15,000 meters of drilling. We're starting off some drilling any day now to test some of these potentially copper-rich projects. The previous operators were only focusing basically on the higher-grade PGMs. So it's going to hopefully get some luck at the drill bit. Important here, I know Jim talked about it as well, very important in Northern Ontario to have support from the First Nations. We do have an impact benefit agreement or community benefit agreement with the First Nation that borders the south end of our project, Pitikon-Anishinabeg. They're our partners in this project. Just some of the metals that we have from our last feasibility study. The bottom ones are the ones that we'd be producing, just over 166,000 ounces of palladium, 41 million pounds of copper, 38,000 ounces of platinum. Those are the resources we have, not the reserves, but 4.1 million ounces of palladium, just over 1 billion pounds of copper, 1.3 million ounces of platinum. We do have some gold and silver, but they're not green metals, so we didn't include it. Highlights from last year. We did update our feasibility study after our 2021 feasibility study. Numerous marketing events, everyone asked us what was our new capital number. So we decided to update our technical report. That was released last year. We also executed our second phase of our project financing. We secured term sheets with syndicated lenders for $400 million US. 100 from SocGen, 100 from ING, and 200 million from Export Development Corporation of Canada. And that followed up with the stream we did with Wheaton Precious Metals for $240 million Canadian. We've drawn down on 40 million of that so far. That was for 22% of our platinum and 100% of our gold. We did, at the end of November of 2022, we did receive our environmental assessment. It was the highest standard of EA a mining company can go through. It was a joint review panel. It was painful. We got it approved, and now we're starting to receive our provincial permits. We received the first 3 already for phase 1 that we could start construction, and the phase 2 ones are coming in weekly. We probably still have about 3 more to go before we could actually firmly say we're fully permitted. Palladium price. Sorry, Jim, didn't put your stock in here, but you would mirror just these other ones here as well. We're a misery likes company, so palladium has fallen. We're all down in the same level, some down more than others, but I could put some lithium companies on here as well. But just hasn't been big performance for palladium stocks and many other mining stocks. But just out here to show that we're not alone. Jim touched some of the palladium platinum deficits that are occurring. I believe they're going to continue to occur. I know there's some estimates out there forecast there's going to be surpluses of palladium in the coming years. I don't see it. We're actually looking at another independent report of the supply-demand deficits for palladium. We see deficits for the numerous years, especially with the power issues in South Africa and some of the issues at the Norilsk project right now, not being able to import certain inputs for their manufacturing in the refiner and for their actual processing plant and their actual mining equipment. So there's no expansion happening there. There's also visible short positions. This came out of Norilsk themselves, but it's a 7 million ounce market for palladium produced a year. There's another 3 million in recycle, so call it 10 million ounces. And we see upwards of 3 million ounces short in the palladium market. So at some point, they're going to have to cover. Hopefully, it'll be at a much higher price than it is today. I could get into some of the demands for palladium. Again, Jim touched on some of it on the hydrogen fuel, but our big focus is on the plug-in hybrids and the hybrids. Lots of talk about the BEV. Everyone going to be getting the battery electric vehicle soon. I know I want one, but I really don't want one until I know my grid is better and I have the proper charging station. I think there's numerous people out there that do have that range anxiety that I have. So until that happens and until a lot of the grid gets fixed and the prices come down, I see that the plug-in hybrids and the hybrids being the natural transition to before we all go over to the battery electric vehicles. Palladium supply, I touched on that earlier. Lots of shutdowns happening. Sibanye, Montana, I think Lactazil in Ontario is having some issues now. And the South Africa projects they're high grading some of their higher grade areas. So I think that there's going to be a supply crunch happening soon. And another thing is, it's not on this presentation, but we do have a slide on all-in sustaining cash costs for many of the palladium producers that are out there. And I believe they're upwards of $1,500 to $1,700 for the third and fourth quartiles. I think the only project that would be able to say that they're making money on the palladium would be Norilsk right now. The majority of them would be losing money at sub $1,000 an ounce for palladium. Just a slide that shows our copper upside. So just assuming palladium stays at $1,100 an ounce, lots of talk about where copper is going to go or will go. But as you can see, the higher copper price goes, we turn into a copper project. I prefer palladium to go up as well, but this is just to show people that we're not just strictly a palladium development story or producer, where the copper will certainly help as well. Not going to get into the copper supply too much. I know we all know about it a lot, but the First Quantum and many of these other projects that are happening, and just not enough supply of metal coming out. Feasibility study highlights. 2023, we announced, as mentioned earlier, our updated technical report. Our initial capital went up to $1.1 billion from $888 million. It was about 26% higher than it was in 2021. Fairly short payback at 2.3 years, IRR of 26%, and an after-tax NPV of $1.16 billion. Life of mine metal payable, as you can see, is fairly large. We'd already talked about the average payable metals, but copper equivalent just under 140 million pounds and 283,000 ounces of palladium equivalent a year. Our ASIC is about 813 palladium ounces per share. This is based on, I know it's small print, it's $1,800 palladium. So obviously at today's prices, it would be a little bit less or a lot less than that. That was when we put out our press release. It was the 3-year trailing average or the lesser of the spot price. And as of last year, when we put out a report at the end of December, it was at $1,850. So we chose $1,800. So it's fallen off pretty good the past 12 months. What we're doing in 2024, we updated our feasibility study, not really using benchmarking. We're a little bit further along as a class 3 estimate, so we went up for firm prices. About 64% of our prices were firm. We are going back to those vendors right now. I can't give you much certainty that all the prices have fallen, but a lot of the prices have fallen from concrete to steel. Labor's obviously gone up, but there's some ways that we're looking to optimize our project and hopefully our capital in 2024. We're looking at different pit optimizations. We're looking at different ball and sag mill designs. So we do have a very good operating team right now, and they're chomping on the bit to start construction. So right now they're looking at ways that they could optimize this project. We did have one large pit. The southern pit was higher grade in palladium, and we're looking to maybe not mine that earlier on and just mine the northern pit first, which is more consistent copper. and we'd have a lesser strip, and so less mining equipment. So there's certainly some savings that we could look to optimize this project in the future. Advancing our permitting. Again, I mentioned at the end of November, we did receive our environmental assessment, so that meant we could apply for all of our permits. We got our closure plan, which was had consent from our First Nation partner, Bidigan and Schnabeg. We got our species at risk, which was a painful permit to go after because we're in a caribou range and there is no caribou, but the government still wanted us to protect the caribou if they ever came back. So it was like, let's make a deal on Monty Hall, but we finally got that permit approved and a permit to remove, which was that basically we could start to harvest the trees, which we are not doing until we get our phase 2 permits, which, as they say here, should be coming along in the winter, spring of this year. Exploration, it's, I've mentioned earlier, it's a big project, 220 square kilometers. The majority of the drilling, the 250,000 meters, has been in the main zone, the W Horizon. W Horizon is a higher grade palladium that I mentioned. It was actually named after the old CEO, Phil Walford. And what we'd like to do is to step out on the main zone. One of the drill targets we have this year is the Bewobik, which is actually First Nation for metal, which is higher grade in copper than actually our main pit. Four Dams and Sally are some of our high priority targets that we're looking for. Sally actually had, I don't think it's on this, but Sally had actually outcrop of about 200 grams palladium and 10% copper. Again, not going to reiterate what we said before, but our focus is on looking for higher copper dominant prospects within our project. It's only a 7,500, 8,000 meter drill program, but we'll start and we'll see if we can find some smoke. Project financing, I know I went over it a little bit earlier, but we did secure the stream from Wheaton Precious Metals for $240 million. After we announced our feasibility study in 2021, we ran a process to see who went on to help us out on selling a royalty or a stream. There were a bunch of groups, private equity guys that were around. I could say Wheaton Precious Metals did an amazing amount of due diligence, and they are a good partner to have. They made us re-assay some cores, some pulps. They made us do lots of work, lots of site visits. The groups would ask you just to put out their normal core, the pretty core. They asked for the non-mineralized core, the ugly core. The geo team didn't like it too much because they brought out everything. But needless to say, it's nice for them to verify that our resource and I guess our reserves are there as well, because they did their own reserve report as well. So going back to the mine financing, wrong slide to be talking about this, but $200 million from Wheaton. We'll get an equipment lease from CAT for $100 million. And then the $540 million from the syndicated banks if they get bank approval or credit approval, and then we'll work on the definitive documents. Phase 3 is probably why our stock is trading where it is. We are not fully funded. If you add all that up together, we're about $850 million. And this is where we really hope we could tap into. There's 4 different, as you could see here, venues that we could look at. The one that I think is going to be the most advantageous for us would be the Canadian Infrastructure Bank. And then there's a new CMIF fund as well that we're looking to tap into as well. But I think with our project being one of the only projects that I know of, critical metals, that are almost fully permitted, that this government, federal government, needs a win or two, and this would be very good if they could give us some of this money. And it's not going to be grants, it's going to be loans, and we're okay with that as long as it fits in our cap table. But I'm quite confident that we're going to be able to receive some money that's going to reduce our funding gap quite a lot. Capital structure, Sibani is our large shareholder from when we purchased the project. And you've seen these names before: Lucas Lundian's Family Trust, Wheaton Precious Metals, Eric Sprott, officers and directors. I own about, 8 million shares myself, underwater like most other people. Market cap just, I guess, under $60 million. We've spent probably $70 million on the project the past couple of years, so we're trading less than our market cap. So that's it.